YouTube. And here we are. Hello, everybody. Welcome. How fantastic to see you all. We have got a fantastic session planned for you today. My name is Danielle Stein-Fairhurst, and it's my pleasure to run yet another virtual meetup. And the speakers that we have got in store for you today are not one speaker, but we have got 3 speakers, and they are joining us all from the UK. So here they all are. I will introduce them in a sec. But first of all, I'm just going to do a little bit of housekeeping. I'm going to just let you know, if you're joining us on Zoom, do feel free to put your questions or anything you want to talk about in the chat or in the Q&A. If there's questions, we're probably going to address the questions at the end. If you have questions as we go through, feel free to just pop those into the Q&A and we'll address those at the end of the session. So who we have joining us today? So first of all, I'm going to introduce Larysa Melnychuk. She is passionate about FP&A because that's what we are talking about today. She has held senior FP&A roles at leading organizations before setting up the International FP&A Board. She did that in 2013. The board is a global and well-recognized professional think tank that aims to bring together the knowledge and experience of FP&A professionals and aid the development of best practice in the profession. So welcome, Larysa. It's so lovely to see you again.
Thank you so much. So glad to be here. Thank you, Daniel.
Okay. And we have also Hans Gobin. He is also part of the FP&A board. He is a finance director with over 20 years of experience in financial reporting. Hi, Hans.
Hi, Danielle. Great to be here. Thank you for giving us the platform. Looking forward to the meeting.
Yeah, and we've got David West. He's a qualified management consultant and has decades of global experience in the vendor community. Hi, David.
Hello, Danielle. Yeah, it's great to be here.
Yeah, nice to see you. Okay.
Cheers.
So both Hans and David, they're both members of the London International FP&A Board, which and they all regularly deliver talks on FP&A related subject matters. So they are going to, well, Larysa, I'll hand over to Larysa in a sec, and she's going to explain a little bit more about what the FP&A Board does. But I know for a fact that they do run lots and lots of fantastic webinars, which I'm sure they'll tell you about as well. And I'll also send you some links to some of those sessions that they've got coming up. So what we're going to be discussing today is a maturity model for FP&A as a way for companies to define their goals and then to plot a journey towards world-class FP&A. So I'll hand over to Larysa now. Tell us more about it.
Thank you, Danielle. Good morning, good afternoon, good evening, everyone. We are so happy to be here as a panel and to share with you our experience, the results of our research, the result of our travel around the globe and meeting with so many practitioners around the globe. So this is the agenda for today. We will look at what is happening with FP&A right now, moving from traditional to extended planning and analysis. We will look, as we assume that this community is so much about modeling. I know that you are passionate about financial modeling. We will look at the latest trends in driver-based modeling, and driver-based modeling as the basis for predictive planning, predictive analytics. And then we will share with you FP&A maturity model. So what is your journey for excellence? The tool that allows you to see where you are and where you would like to be, and what are the steps, how to get there. And of course, some conclusions, recommendations, and we suggest that Q&A session will be at the end. So this is the plan for today. Yeah. Before we start, we really would like to give you just a few words about our companies, our organizations. So as Daniel mentioned, I'm British qualified accountant. I'm a member of Chartered Institute of Management Accountants, and I was working in FP&A all my professional life. But then several years ago, actually more than 7, I decided to leave the corporate world, and I established International FP&A Board and FP&A Trends Group. It was amazing travel, actually until 1 year ago. So we established 27 chapters in 16 countries on 4 continents. And actually in Asia Pacific region, we have 4 chapters in Australia and 5 chapters in Asia. You can see all the cities here. But it's not only this. Just recently with Hans and David, meeting the demand of global demand actually on the latest FP&A knowledge, we established Plan-to-Plan company. Again, registered here in the UK, but we are doing projects all around the globe. So it's about workshops on latest trends. It's about the full cycle advisory practice. So this is just a quick introduction of who we are, who are our organizations. I would like to start with a quick introduction on the latest trends, something that we call extended planning and analysis, or xP&A. So let me give you just a little bit of background. We like to describe this incredible environment where we are at the moment with help of this uncertainty cone. And uncertainty cone definitely demonstrates why everything what we knew about traditional management accounting, traditional planning and budgeting doesn't work anymore. So the world is like cone, and we can forecast and use our traditional methods only within our predictability span. But what is happening? Predictability span is decreasing with every month, with every year. And I think exactly 1 year ago, millions of companies around the globe found themselves with dead budgets and with unrealistic forecasts. So everything about the future of modern financial planning and analysis and decision making, it's about the multivariant environment. It's about scenario management, scenario planning. So not one scenario as usually in our traditional world, but definitely a number of scenarios. This is just a slide which demonstrating this, a quick glance of what is the traditional FP&A with our quarterly scheduled forecast and plans, very heavy, long annual plan, and obviously extended FP&A. It's all about quick and dynamic scenario planning, reforecasting, replanning on demand, practically in real time and at different levels of the organization. So other words, when Gartner introduced this term in February, we weren't surprised at all. We see that definitely financial planning and analysis is going beyond of just finance, and it's happened at least for the last 5 years. There are so many different names for xP&A, such as integrated FP&A, digitized FP&A, next generation FP&A. So it's all about the best practice in modern financial planning and analysis. And of course, when we talk in more details about the planning processes in organization, we are talking about 3 main planning processes. It's your strategic planning, business planning, and operational planning. And obviously in this next generation FP&A or xP&A, we're talking about harmonizing all of those processes through drivers, through system, your processes, people, culture, top-down and bottom-up processes are really harmonized. So your vertical and horizontal processes as well. I think what we are going to do today is to look at some of the subjects, how we can move at this space where we can place scenarios practically in real time, how we can move to xP&A best practice place. And all our presentations will be around this. So Hans will be talking about driver-based planning, and David will share with you maturity model. But before we do this, we really would like to have some feedback from you. So I asked Daniel to launch the polling question, and please, if you can kindly vote. So what technology do you currently use for your budgeting and planning, for your FP&A? Is it Excel? Is it a specialist planning tool, or none of the above? So maybe you don't do plan at all, or you use something different. So please, if you can continue to vote. Daniel, you will see.
I can see the results are coming in. We might just give it another couple of seconds and give everybody a chance to finish voting. Yeah, okay, and I'm going to stop it now and we're going to share the results. And as I expected, it is overwhelmingly, the results are that 82% of people are using Excel. A small number are using a specialist planning tool, and only one person says they use none of the above.
Okay, so no surprises here. David, Hans, let's start from you. Any commentaries?
Yeah, no, of course, I think we expected this very definitely, but just from touring the world, obviously digitally lately, we see a very different aspect of things. Of course, it's probably split more or less 50-50 in terms of people using tools and people using Excel. So that's what I would like to add.
But I think we are in a sort of an Excel environment at the moment.
Absolutely.
So it's to be expected.
Yeah.
David, what would be your commentary?
Yeah, I mean, I think Excel is still the tool of choice. Now, I come from the vendor environment. That's the sort of thing I'm bringing to this. And there are a lot of tools out there, and you're starting to see them become more popular. But even when a tool's implemented, you'll still see lots of Excel around, and I'm sure it'll be around for many, many years to come.
Thank you so much for commentaries. Just wanted to ask David and Hans, do you have any subject matter to add to the previous slides, to the presentation about xP&A, before we go to the next item of our agenda, driver-based planning?
Yes, so if I may start then, Larysa, just quick one. As you explained, it is not a new concept. We've been doing extended planning and analysis for quite a few years. But just generally, again, adding to what we've seen through our webinars, 22% of companies have already adopted a full-blown xP&A integrated platform, and they are using it. 42% have updated their structures already to go to that next step, and 36% are thinking about it. So, there's quite a high adoption rate already. So it's not a new concept is what I would like to add. It's something that now it's brought to the forefront of via Gartner. People are thinking about it more, but it's a great thing because we are thinking about it and we're putting it into place.
Thank you, Hans. Definitely. David, anything to add?
Oh, only just that for the 82% of you who are using Excel, I've got some good news in that we were kind of anticipating that, and the rest of the session will be oriented towards your interests. So that's good news.
Fantastic. Thank you so much, everyone. And thank you to those people who voted and shared their experience with us. So now let us talk about driver-based planning, which is the basis of many best practice methods in modern financial planning and analysis. So driver-based modeling as the basis for predictive planning. So Gobin, Hans, the stage is yours.
Larysa, thank you very much. And Daniel, thank you again very much for giving us the platform today. So what I would like to share with you today is the evolution of planning and the best practices we see going around the world. So on my first slide, you will see it starts off with the stuff we all know very, very well, traditional planning model. Three little blocks there. So user entered values, traditional planning model itself, and what does the model generate? Typically, the traditional model is all around financials, only financials. People base it mostly around their existing chart of accounts in the company. I think we've all seen that. Estimates input based on what income we believe we're going to achieve and what are the resources required to deliver those income. Also, another model that is very often used is what did I spend last year? What is the RPI looking like, the rate of inflation? Let me add that on to last year's. And guess what? Bob is your uncle. You've got a planning or a budget or a forecast done there. However, this model is very, very biased. There's a lot of politics involved in there. There's a lot of senior management aspirations. Bonus schemes is involved, as we all know. So there's a lot of subjective game playing that goes on. Often there's little connection to the outside world, to past performances, to expectation of current and future business environment. And as we've seen over the last year with the pandemic, if you're using one of these models, it is irrelevant very, very quickly. And to be able to do that again, you will spend a lot of time. Lengthy and inefficient is the model. Numbers game, where a participant, attempt to guess what the figures are, needing to meet that goal that board is set to us, and how do we get to this. So there's little relationship with the reality, as we know. And if you spent 4 weeks, 4 months, and in some cases a lot longer than 4 months to do your budgeting cycle, guess what you would have to redo and respend that amount of time doing it all over again. So not very flexible at all. So how do we overcome a lot of these efficiencies in our traditional planning process? On my next slide, you will see what we call the driver-based planning. So what is driver-based planning model? 3 blocks again, but you will see a few more arrows. Of course, we talk about, we need to identify key business drivers. You will see on the left of your screen. These are operational drivers that have a direct financial effect on return on asset, EBIT, your financial statement, balance sheet, P&L, and cash flow. So for example, we could use headcount to drive training and office cost, sales volumes to drive revenue and cost of sales. And all of these values will be entered only once in the model, whereas in the traditional model, you will see these values entered over and over again. Organization using driver-based model can therefore generate plans by entering the value of a few drivers, and the mathematical formula will calculate and give you your end result. How do we determine what are the key business drivers? We need to understand and use the Pareto principle. So 20% of the drivers that explain 80% of the values. Very important here to also think about how many drivers do we use in our modeling. 5 is probably the max that we should be using. We should also think about how often we revisit these drivers. It has to be regularly, at least once a year. Some of them may drop out. You may find because of what's happening and new businesses you're doing or going into, things have changed. So some will drop out, some will drop back in. So has to be revisited all the time. Driver-based planning model forms the basis of quite a few new tools as well. So you're talking scenario planning now. You're talking predictive analytics, rolling forecasts, and as Larysa mentioned, xP&A early on, it is the basis of xP&A as well. Let me share with you the next step in that evolution then. In my next slide, you will see predictive planning. So what is predictive planning? It expands the power of driver-based planning. It adds additional capabilities to our planning in the world of unknown. So we can now use statistical techniques for seasonal and time series analysis to populate future presentation, future calculation, future modeling. We can use machine learning to help discover hidden drivers and impact on future goals. We can look at things at a much lower level in our planning. So for example, location or by location, by customer, transaction level detail, human and machine identified drivers. So whereas before we were just using human identified drivers, we can now use machine learning to identify those drivers for us and use them to drive our model. Very important, internal as well as external drivers should be used, especially in times of uncertainty, external drivers. One great example that we've come across in our FP&A meetings is the Richmond Group, who deals in luxury items like Cartier watches and jewelry. They identify one key business driver that was generating up to 65% of their results. That was an external driver too. And amazingly, it was the Chinese RMB rate versus their own rate. So most of their clients were from China. So how did the rate affect all of that? So that was key. 65% of the outcome was determined by just the rate. Planning just for profit is not good enough anymore. We need to start thinking about three-way planning. Very important. P&L, balance sheet, and cash flow. Not a single plan. So this gives us the opportunity to do scenario planning. Look at a playbook of those things and likely outcome that may happen. Best case, worst case, most likely cases. Lots and lots of benefit of predictive planning. Acceptance is based on drivers that are relatively easy to understand. So people accept it a lot more. It is simple to reforecast because it's all modeled and can happen very, very quickly. Agility for organization to respond to external events, as we've seen in the pandemic. All this leads to insightful decision-making at the end of the day. Another great example is Microsoft, where we all know of Microsoft, but they can literally plan at the touch of a button across the world, across thousands of SKUs, across geographies, across the organization, extended xP&A, and of course, P&L, balance sheet, cash flow, all in one go. So that's a bit about predictive planning. If I move on to my next slide and just share with you the evolution. I've discussed most of this already. So you can see right at the bottom from the traditional planning, we move on to a partially driver-based modeling, then to a fully driver-based model, and then finally into our predictive and prescriptive, where we can use AI and machine learning. Finally, before I finish, I'd like to share quickly with you the maturity model. So having gone around the world in our FP&A meeting, we have come up with this 5-stage model or 3-stage model where you can look at where you are and how you want to move from one point to the other. I will not go into a lot of detail on this model because I think I've explained quite a bit. But if you look at that leading stage there, where number 5, leading, so we're talking about fully integrated. So again, it's an xP&A sort of model. The drivers are user and machine defined. The values are linked to the detailed plan. More importantly, you find the operational plans are linked to it as well. And I think this brings me very nicely to the end of my presentation, where I think the key thing to just wrap it up says, you know, I would say if you're not doing driver-based planning, you need to start. You need to identify those key drivers where 20% are driving 80% of the value. We need to start using machine learning and AI to determine the key drivers. Most of these could be modeled in Excel and then potentially put on a platform once it's grown too big, so that we can do scenario planning on a real time. That brings me to the end of my presentation. Thank you very much. I would like to ask David and Larysa to give us any insight they would like to add into the subject matter. Thank you. Larysa?
Hans, thank you so much. It's a great presentation, great quick overview of driver-based planning as a basis of all the best practices in FP&A. What I would like to say here, just a few words about this particular predictive planning maturity model. So this is a sub-maturity model that we developed last year through the research project. So it shows you the evolution, it shows you the maturity of predictive planning tools. And Hans, what I would like to add to your presentation, that obviously a driver-based model, this is the winning tool for many organizations. We've seen how only through introduction of simple planning model, companies can move from one stage of maturity to another one. But obviously, the next level of maturity for predictive planning, something that human intelligence should be done together with artificial intelligence. It's introduction of predictive analytics tools and prescriptive and even using machine learning. So this is the next step. Thank you so much. David, would you like to add something here?
Well, I'm just going to build on this maturity model in the next section. So let me hold my powder dry just for a moment.
Excellent. And I think what we would like to hear from our participants at the moment. So where they are at the moment in terms of predictive planning. So please, can you start voting? How would you describe your planning process? Is it three-way driver, fully driver-based model that combines all the three financial statements? Is it fully driver-based model, but not three-way modeling? Maybe you do only P&L. Some drivers used, but not not fully driver-based, or it's static, no drivers at all. So this is your planning process. Daniel, the majority of how you feel. So can we close it now? What percentage of people voted?
Yeah, I can still see the responses are coming in thick and fast. So, and they're quite interesting. It's a bit different to the last one. We've got quite a spread of responses. So another couple of seconds. I'm just going to leave it for a few more seconds, and then we'll end the polling. And there we go. And I will share the results with you. And by a small margin, it seems that most people use some drivers. Yeah.
Excellent. 35% three-way, the best in class three-way driver-based modeling. 11% fully driver-based, but not three-way yet. Some drivers used in 42%, and static no drivers, 11%. Hans, any comments?
Yeah, no, I can see a very similar range of answers to what we've seen before. So very much resonates with the rest of the world, to be honest with you, with probably about 10 to 11%. In some places, maybe slightly less on no drivers. But it's great to see that everybody seems to be using drivers. And I think we need to just push and make our model fully driver-based as much as we can, but nothing unusual yet.
Thank you, Hans. David, what would you say?
Well, there's obviously some very adept and skillful Excel modelers out there, because 82% of you are, and frequently you see that it's quite difficult to incorporate full driver-based modeling in Excel, especially where the volumes of the data are quite high. So congratulations to everybody for your progress.
Thank you everyone for voting. Thank you for commentaries. And now let us look at the main tool, FP&A maturity model. This is your journey to excellence. Just a quick history of this model. We started, the first model was developed at London FP&A Board at our face-to-face meeting, the meeting for senior practitioners, where we have, that is exclusive to CFOs and finance directors. So the skeleton, the main structure of the model was developed there. But then with traveling around the globe, we adjusted this model in 27 cities in 16 countries and 4 continents, and we continue to do this. And now David, Hans, and myself, we are doing research as well, but David will give more details on this. David, the stage is yours.
Okay. Thank you. I think the key thing to say about this is something that is unique, really, in the FP&A industry. And it's been going for about 5 years, and Hans actually was one of the key drivers in this back with the London chapter of the FP&A Board. And there's probably hundreds of practitioners been involved in developing it, plus some key thought leaders and academics. So it's a very rounded and a mature piece of work. And what it's trying to do really is give everybody in FP&A at whatever level some kind of vision for what world-class really means. So what's best in practice for planning and analysis? And then where am I on that level? How far have I got? And then how do I take steps in order to move myself and my organization forwards? So it's a framework that we can all use. Let's have a look at it now on the next slide. And this is basically the superset maturity model. You've seen a subset which was just for the predictive side, and that's reflected in the analytics piece. But here what we've got is 6 categories, or swim lanes as we sometimes call them, down the left. And then on the top there, you've got the different states that you might be in, the different levels, from level 1 basic through a developing phase, through a defined phase, where a lot of things are now defined and well organized. And then you've got the advanced stage where you're starting to use some more advanced techniques, and leading is typically the top 1 or 2% of companies around the world. And that is really the visionary state that we might all aspire to. So that's kind of our leading light, really, the level 5. Let me just take you through a simple example of the top line here, culture, just to give you a flavor for how it works. So what you can see here is this model is really looking for an analytical and change-based culture. So at the basic level, you've probably got a more traditional culture where analytics are not really part of the scene. Whereas once you get to defined, you're starting to see some level of an analytical insight and skill being applied to the FP&A function. Whereas in the leading state, you've got a true situation where you can embrace change, and your analytics are at a level there where it embraces and enables you to make changes and look at things on a dynamic level, this near real time that Hans and Larysa have referred to. So that's kind of an example on the culture. I'll take you through some of I won't go through every single line here because of time, but as we go through it, have a look, because the next polling question is going to ask you where you think your organization is. So I'd like you to be ready for the answer to that, not on each individual level, but overall, where do you think you are on these levels 1, 2, 3, 4, and 5? So have a think about that. On the people side, here's where you have a look at whether you've got traditional accountants, qualified accountants in the FP&A team, or in larger companies where you've got a leading state, you've got a multidisciplined team approach. And the sort of skills here would be people that really know the business, people with the soft skills, people with storytelling skills, and a much wider range of skill sets, including data science and perhaps some IT and data architect type skills as well. And that's something we see in the leading states. We talked a bit about process and analytics in the last presentation. So let me just focus really on technology next. So as you can see, in a basic state, here's the use of Excel, no BI tool. Excel probably goes all the way through this, actually, at some level or other. But there will reach a point really in technology where Excel is not always the right tool to use where you've got a larger team. So you've got multi-user requirements. You've perhaps got really massive amounts of data. Perhaps you've got a lot of drivers, maybe more than 5 drivers, and you need to have a look at your data by lots of different angles. And so here's where we'd also look at, are you using BI tools? Are you using visualization tools to help you tell the stories and create the reports and share the summaries of the information, and are using a planning tool across different parts of the organization, not just finance, not just FP&A, but operations and management and so on. So that's the sort of technology piece in a nutshell. And lastly, business partnering is incredibly important. Again, there's work going on here that we're doing further research looking at business partnering and a maturity model to highlight that. The key thing with business partnering is whether you've got people in the FP&A team who are really devoted to a part of the business and really getting to know it inside out. So providing a better service and providing those insights, sitting on the board, having a seat at the table, really helping the operational management make informed, and rapid and great timely decisions. So that's where it becomes collaborative and challenging in the on the leading state. So are you ready for the polling question? Can we have a polling question, please?
Let us launch the next one, Daniel. Yeah, so where are you at the maturity model? Where is your organization right now? Is it basic? Is it developing? Is it defined, advanced, or leading stage? Please continue to vote.
Okay, I can see our results are coming through. So the question was, where is your organization on the maturity model? Is it basic, developing, defined, advanced, or leading? Okay.
So where we are now?
Wow. And 50% of people said that their organization is probably developing. Interesting.
Interesting, yeah. But
Yeah,
no
very
surprise
interesting.
here. David, your commentaries compared to
I'm going to ask Hans, actually, because Hans is really our stato when it comes to this, and he may have some comparisons of this result to other polls that we've done in the past.
Thank you, David, for passing the buck. But there we go. No, absolutely spot on. I think 20% in the basic. We are going around the world. We are in this 15 to 20% range. 47% is what we see in developing. So 50% there or thereabouts. Absolutely. Defined 21%. 25% is what we see. So we are not adrift at all. I think what we've seen more probably is a few companies in that sort of leading stage as well. So we have 1 to 2% wherever we travel to see people are in that leading stage. So there's a few companies we can learn from. Microsoft is probably one example I gave early on. So absolutely very similar, Ray. Larysa, anything you want to add, please?
I would say that we started to check and adjust this model in the last 5 years. And we had those face-to-face discussions in 27 chapters. And interestingly enough, you would see even those so-called well-known leading multinational companies that still sitting at developing and defined, somewhere in between, yeah. But what I want to say that sometimes only one implementation of driver-based model or one system, it really allows to move to the next level. So it's quite interesting. So thank you so much for this. If no commentaries, let us look at some of the examples. Yeah. Thank you. So I'm closing this, and thank you so much for all your votes. David?
Well, it's very interesting, isn't it, really? So I suppose, having voted, you might now be interested in knowing, well, what's going on out there? How are people getting into the leading and advanced states? And what can I do to measure myself and my organization and then move forwards, which I'm sure we all want to do. So I've got just 4 stories for you. The first one here, from the work that we're doing on a maturity model. Incidentally, this is a global piece of research we're doing on the maturity model across all industries and geographies, and it'll be out early in June. And if you sign up to the FP&A Trends website, which is free, you'll see the news there, and early June you'll see how you can get a free copy of it. So, but here's some extracts. So this one is a large healthcare diagnostics company, and they were really at the same sort of levels that you guys are. You know, they were at level 1 or 2, and the first thing they did was the drive to succeed. So that was coming from the top, really, having management support. They used Excel very heavily. You'll be interested to know. They then used some project and management techniques. They used Kaizen and huddling, and I think called value stream mapping, where they tried to map the value of some of their drivers and some of their outputs. And they put all that into an Excel-based tool, and it really started to help them and move them forwards towards level 3 and 4 within a year or two. So that's that one. Could I have the next slide, please? This is a Swiss company, and they are they found it very difficult to move forward in their maturity levels without fixing the processes. And this is, again, something we see regularly. So this is a good example of something that is quite pervasive. You may have the same issue. If you've got a bad old process and you put technology on top of it, let's say putting a planning tool or something in, you'll end up with a bad but automated system, or an automated but bad system. Comes to the same thing. It ain't going to put you much further forward. In fact, automating a bad system can be worse than sticking with what you've got in some cases, and we've seen that. So the data model, putting effort into the data model is important. And of course, you don't need an awful lot of expenditure or investment to do to fix processes and look at processes. You just need time and effort and collaboration across the different parts of the company. So next slide, please. Here's another. So this one is actually a global bank based in Paris with the name Paris in their name, but can't say who it is, obviously. But they've also done an awful lot. They started off with quick wins. They wanted to establish with their management that they could do things quickly and get quick results, start with a small project. Their first project highlighted actually poor data quality. And then the next project then became, the next quick win was, how can we improve the data quality? And then they're on their path then towards their level 4 or 5. And that's how they went about it. Next slide, please. So we've been working with Griffith University, and here's a great quote from one of the professors there. He's very keen on data, and being an academic, you might expect that, but data is really important to FP&A. You can't analyze unless you've got some good foundation. This is kind of what he's saying here. So become a friend to the data, let data be your friend, spend time with it, ask lots of questions, really understand it. Sounds like a relationship somehow here, but I think there's some really great insights here. Some of this will appear in the paper in more detail as well. But he's saying, watch out, because if you model based on incorrect, out of date, or irrelevant data, you could get a great outcome. Your model could be absolutely wonderful and accurate, but the outcome could still be a big lie. So data is the crux, is his view, and that's again a very prevalent bit of advice that we can pass on. Have a look at the data. And again, you don't need massive amounts of budget. So if I can kind of summarize, really, how do you move along? Well, first of all, measure yourself using the model as you have done. Have a look at it in more detail. The slides will all be available. You can reach out to FP&A Trends where you can get more information on it as well. Reach out to us. We'd be very happy to talk to you. And I think there's a few lessons that have come out from those case studies. You don't necessarily need a big budget. You don't necessarily need the sanction of a remote head office either. You can do things locally, right? Particularly if there's a big transformation program going on, you can still do small projects locally and get those quick wins that we talked about just there. A transformation program is not needed to move to level 5 either, in our experience. think data, the importance of data is really vital, and that should be in your thinking at an early stage, not at the end. That's a good piece of advice. And then for 82% of you, the good news is you know you can do your driver-based modeling, as Hans was saying. You know, you using Excel. There's a lot of techniques in Excel. There's a lot. It's a very rich environment, as you guys know better than us. So you can do that. Eventually, when you run out of steam, you'll find that your Excel model is fantastic for then applying what you've learned, all those drivers and the structures, into a tool as and when that really is needed. And finally, work on the processes. Again, you don't need big technology investment to smooth out your processes, and you'll find that your FP&A works like a dream with a smooth process. So that's my summary. I hope you enjoyed that, and I'm going to hand over to Larysa to give us an overall summary of the session.
Thank you so much, David. A great overview of the research project, of the maturity model, and the steps that I needed as well. Before I do the summary and before the Q&A session, just wanted to ask Hans to comment as well.
Thank you, David. Great presentation. I was just checking whether I was on mute or not. Apologies for that. Yeah, this model has been going on with various different reiteration from about 2016. So we now see it in a great state, and we're still doing a paper on it, so soon to be out. Very important to understand that it's a model. It's not one that fits all, and it's also important to understand that businesses need to know their priorities, where they're heading, what resources they have at their hand as well to be able to move to that next stage, and what to them is their priority. So those are 2-3 things I would like to add, Larysa. Thank you.
Thank you so much, Hans. I would like to add to this that the latest trends in FP&A, in xP&A as well, they're country agnostic, they're vendor agnostic, they're industry agnostic. It doesn't matter where you are. Any organization at the moment should be quick and dynamic in decision-making process. And that is why the best practice works for bigger, smaller organizations, for any industries. And I would like to make a quick conclusion before we go to the Q&A session. And those 9 steps of FP&A analytical transformation, obviously they're covering only the analytical part, analytical subset of the model. And what I would like to say that those are the conclusions from our International FP&A Board chapters. It doesn't mean that you have to do this one after one. Something could be done in parallel, something could be done in different order, but those key messages are really important. So first of all, everything starts from analytical culture. You know that a budgeting process could be very political. The company should be acceptable to analytical transformation. Data quality, it's one of the biggest problems at the moment, you know, and it should be also solved. But it doesn't mean that if the quality of data is not good, you shouldn't start this journey. It could be done in parallel. Collaboration of your different stakeholders, it's very important. Identify the key drivers, and we were talking here about this, you know, those external, internal, those drivers that can really explain your results. Build this driver-based model, but it's so important for modern organization to implement this model through collaborative system. There are a number of collaborative systems that could be very easily managed. So definitely this is the key for integration. Automate routine as much as you can, place scenarios, run scenarios, and do your decision-making process. But this is the circle, it's never ending circle. And the improvement is step by step. Thank you so much for this. I think it's a good timing for a Q&A session now. And I would like to ask Hans and Daniel to manage this.
Fantastic. Thank you so much. We've got a couple of good questions in there. One from Henry. We can always rely on Henry for a great question. Henry says, you mentioned the maximum of 5 drivers in a model. Will the number of workable drivers increase as we increase the maturity or complexity?
I'll take this one, Danielle. Thank you very much, Henry. Yeah, great question. I think the key thing to think of is with maturity, things should get easier, not more difficult. And I think that Pareto principle applies wherever you are on that model, in that, you need to look for that 20% that drive the 80% of the value of the business, and keep as much as you can to a minimum the number of drivers. Larysa, anything you would like to add, or David, on this?
I would like to add something. It should be so restrictive as only 5 drivers. You see, the main thing that it should be manageable number of drivers. We are talking about the output that is advisable, maybe around 5 to 10, and we see how it works well in big organization, in global organization. For example, Swiss Re, the biggest reinsurance company in the globe. So they can understand their top 5 drivers practically to the customer level. But obviously, in order to build the architecture and in order to build different levels of your planning, there could be more, much more. But the main thing that they should be manageable, you see. So this is my answer.
Great, thanks, Larysa. Another question from Robin. Presumably, even at the leading stage, there will be non-driver items, for example, repairs and maintenance in a manufacturing environment where the type of spend does not necessarily relate to volume, people, space, etc. So how would you address that when it's not volume related for drivers?
Who would like to take it?
Okay. I'll start anyway, Larysa. You can carry on. No, non-driver related items will be a business as usual, because those are quite easy for you to think of and predict and forecast. It's the driver related items that are the more difficult one to do. So those items are easily dealt with at the very beginning of the stage anyway. It's the driver one that is more important, because those are the ones that are variable, that are affected by unknown pandemic, you name it, whatever is happening. So I think less important to worry about those one, more important to worry about, what are the key drivers, how are they affected, how are they affecting our results. So that's my take on it. Larysa, anything you'd like to add?
I would say that in my organizations, when I was driving FP&A at different countries as a practitioner, we looked at this from this point of view, that even the fixed cost, something that we call fixed cost in the long range, it's a variable cost. So try to look at this from different points of view. And the reality is that it's probably with our human experience and human intelligence, we know that it's fixed cost. But if we look at this, if we look at the behavior and some outside drivers, maybe it's not. This is the first thing. But obviously, if it's a typical fixed cost, then it should be as the fixed one, which is just fixed over there in your model. But drivers, they drive different scenarios, so it's quite easy. Thank you. I don't know, David, anything you would like to add?
Well, only that I've observed that in some really large companies where you've got different divisions, the drivers for division A, let's say maintenance, part of maintenance division, can be really quite different. They can be internal drivers based on the sales from other divisions that then get go into the maintenance stream of that organization. And you can have different drivers for different groups of geographies as well. So I'm afraid that one size doesn't fit all with the drivers across the whole global organization.
Thank you. Daniel?
There's another question from Sylvie. I don't know if you can read that one, Hans. It's a fairly long one. Shall I read it out? So it's for Hans. From
Yeah,
what I
if you can read it out, I'm reading it at the same time, but yeah, please do.
Yeah, Hans, from what I understood, the 5 drivers to be identified across each element of the chart of accounts, revenue, expenses, categories, or at department levels. Could you please confirm, does this work top-down or bottom-up approach is better for developing plans or budgets? I also think this would work cross-functionally rather than finance in isolation. And what tools are currently being used in FP&A world for integration, etc. And just curious what companies or industries locally in Australia are currently embracing xP&A maturity. So I'm not sure if you're going to be able to tackle all of that, but maybe you could just answer the bits that we have time for.
Yeah, no, absolutely. I think a great sets of questions. I think we'd definitely come back to you, Sylvie, with a full-blown answer in there. I think the key thing to remember is planning gets better, and Larysa talked about xP&A there. It has to be operational, so you can't just look at finance in isolation. If we're just looking at chart of accounts, then we're still at that traditional level, you know. So we will never get to best in class. We have to look at, you know, the drivers that drives the operation. You know, it's not just financial tools and financial drivers that you're talking about. I'm just looking at the question again and see which one I can quickly. In terms of tools, you know, all Gartner's has come up with this and have challenged the vendor community to get on with building as quickly as possible the tools to be able to for us to practice xP&A on it. And I think the next sort of white paper that we're going to do will be exactly on one of those things. Larysa, would you like to add something, and David as well, on the tools?
What I would like to say that there are a number of tools at the marketplace at the moment. And the good thing that if in my company 7 years ago, when we looked at the implementation of tool, we had to choose from three vendors, because we were multi-billion company and it was considered to be that 3 main tools are there. At the moment, there are dozens of them. The main thing that you have really to look at that they should be self-service in your finance department. Dependence on programmers and IT people not good. It should be really collaborative. It should allow you to play scenarios easily. And there are a number of tools at the moment. Look at the Gartner quadrant, but to be honest, not all good tools are there. You know, there are more than those that you can see at the Gartner quadrant. So just be curious. Just ask the vendors, and if you need any help, a plan-to-plan consultancy here to help as well.
Daniel, there's one question I've picked up from the chat room that I'd like to put to the panel itself, and it's probably raised some hair there. So are we saying that MBA is more mature than the Big Fours? So having looked at the maturity model there. Larysa, would you like to add something to this? I've got my own thought. I'm pretty sure David has got his own thought as well.
Is it about that FP&A, it's not just accounting anymore? Yeah?
Exactly. I think that's where we're touching.
It's a great question. You know, 2 of us, Hans and me, we are qualified accountants, and obviously we're in the UK, the country where we have the biggest number of qualified accountants per capita. Yeah. Really? And for us, absolutely. I think it's like 500,000 qualified accountants in the UK, something like this, or with students. So it's a well-respected profession. We know that it's similar in Australia, but then when we started to travel with our international FP&A Board project, for example, in the US, it's enough to have an MBA and to be fantastic FP&A director. In countries like Germany or, for example, in the Netherlands, in Belgium, you will see people without any accounting qualification at all. It's enough to have a university education in finance, and then you set for life. So what I want to say that it's important to understand accounting principles, but it's not enough, definitely. You see, and I would say it's combination. And we developed 5 roles that are important for FP&A. Depending what role you play, the skills are there. But at the moment, we see a number of very successful FP&A people that are not qualified accountants. You see, so it's both. And even data scientists that started to learn finance. Sometimes they're absolutely fantastic. So it's very multidisciplinary at the moment, and it's not definitely not classical accounting.
Just to add to that, Larysa, the other day I saw an advert from Amazon for FP&A director in the UK, and there was no requirement whatsoever for a qualified accountant. Much more, there was hints of being able to VBAs, Pythons, data science, data architecture, and an MBA. So yeah.
Interesting. It's another extreme. I still think that FP&A, it's very important to understand accounting treatments, because you can't analyze if you don't understand what happened, and what accounting treatments are there. So it's both ways, but it's very multidisciplinary at the moment. I'm wondering whether we should now close the Q&A, and maybe if it's needed, we can answer offline. So Daniel,
yes.
If you direct the question to us, we will do this. It will be our pleasure. Yeah.
Yeah, we are pretty much out of time now. And I know there are a couple of questions that we didn't get to, so I'm sorry about that. I will send you through the questions, and you can people get in touch with you, Larysa, David and Hans?
Through LinkedIn, through registering to FP&A Trends website. It would be absolutely fantastic. I would like to give just a few conclusionary slides to invite people. First of all, there will be this upcoming digital FP&A conference where FP&A Trends is partnering with AFP. It will be 2 days of actually almost 3 days, 2.5 days conference. It's absolutely complimentary, absolutely free, and we still have places.
Yay, we like free. That's great.
Absolutely. It will be all about FP&A best practices, and there will be speakers from around the globe. I would like to invite you to register. The link is over here, so please, if you can register.
I'll send that out I'll pop it down in the recording on YouTube, and I'll also send it out in the emails.
Absolutely. And the next one is, there are a number of digital events that we do. Please, if you can join us, it would be about combined power of human and artificial intelligence in April 27th. We will be doing Digital Pan Australia and FP&A Board exactly on about the art and science of xP&A business partnering. And finally, the link is here. We are finalizing very soon our FP&A empowerment survey. And please, if you can take part and give us your feedback. And again, in exchange, you will receive this comprehensive report that you can play with this report. We even do this in BI tool as well for you to choose to see how you're doing comparing to different country, industries, size, and so on and so forth. I think that's it. We would like to say thank you so much. Daniel, thank you so much. And Susan, thank you so much for inviting us. And let us stay in touch.
Yes, thank you so much. That was really interesting, and yeah, we hope to hear more from you again soon. Bye everyone. A survey will pop up, I think, when you're finished, and I will send out the links and the recording